To build anything that truly lasts, it takes time.
How today's trading session could look like and what is the global macro setup looking like. We are now joined by Steve Englander, Standard Chartered Bank Global Head G10 Foreign Research. Sir, thank you so much for taking your time out and joining us here on ET Now. First up, how do you read the latest developments and comments that have come in from US President Donald Trump on imposition of tariffs on pharma and copper? This is just a proposal as of now. Do you think this could translate into something concrete, and what will the impact be on global markets? Should we brace up for heightened volatility over the next few days?
Well, I'm more optimistic that he'll come to some trade deals with some of the other trading partners that they have. Europe seems to be close. There seem to be a couple of others that are close, and I'd still lean towards the interpretation that the nastiness reflects the desire to put pressure and to push these frameworks past the finish line. I think that copper and pharma is a bit different because he sees a national security element in this, that, in case of some international geopolitical issue, he doesn't want to be cut off from antibiotics and heart medicines and all the stuff that everybody uses here. So there may be more to that, I think. In addition, I think that, the most popular drugs now are the weight loss drugs, and they're mostly imported from Europe. And I think he's questioning why that's the case. But I think near term, I'm more optimistic that we'll get past the 9th without there being a markets disaster, and that we will see some framework agreements go through, and it will be risk positive.
All right, so that's the view on tariffs. Hi, Steve, this is Kanishka also joining in. So I wanted to ask you, what's your take on the markets? Now, we have not seen very significant moves arising, as an impact of the tariff announcement that we have seen coming in this week. So do you think the markets are, sort of underpricing the long-term volatility that may arise due to these developments? Or do you see there is, like you said, you were optimistic about it. So what's driving this optimism? Is it, complacency due to confidence in earnings going forward?
Well, earnings continue to be strong, and I'd say that the productivity numbers, which are often correlated with earnings, look as if they're going to be strong as well. So, I think that there is an element that the earnings numbers strong earnings numbers could have more persistence than, say, people thought 6 months ago or a year ago. I think on the optimism, he's gotten a lot of what he wants. And I think that if he can get his baseline tariffs and maybe a little bit more, that he'll be inclined to take that as a deal for now. But I do think that one issue certainly that markets are dealing with is, one, there's the uncertainty about what he's going to do, but there's also uncertainty about how the market's going to react. In April, the dollar fell when yields went up and when equity prices went down. But if you've been tracking the dollar against other currencies over the last 2 months, the response has been the opposite. So I think the market, apart from not knowing what he's going to do, even if they did know, is genuinely confused about how markets will react. So I think we're going to go through a period of what you'd call price discovery, where investors are trying to figure out just what is the model in the market to gauge responses.
Understood. So that's as far as US dollar and its impact on global equity markets is concerned. But also wanted your thoughts on the commodity markets because of the kind of tariffs that we have seen over the last few days. In February, Donald Trump had proposed an investigation for imposing tariffs on copper, and now again 50% tariff has been imposed. What kind of impact will this have on the copper market? And apart from copper, even on steel and aluminium, tariffs have been imposed earlier over the last few months. What kind of impact will this have on the commodity market globally?
Well, I think what it does, it drives a wedge between onshore prices in the US, which are going to be much higher, and leads commodities exporters to divert their exports away from the US because they have to look at what they get net of the tariffs and divert it elsewhere. So it means probably cheaper copper in the rest of the world, but more expensive copper in the US. You know, exactly what the copper issue is in the US that seems to be so significant is unclear. But you know, it does look like that's, you know, if you're a copper exporter, it's going to be tough going.
Okay, so that's the take on copper. But apart from that, you know, Steve, if we look at other safe haven, other commodities like, you know, the safe haven asset like gold, do you, what is your take on diversification into these assets, given there is tariff uncertainty when it comes to specific sectors like pharma and, you know, copper, as we just discussed?
Well, gold has been tracking the dollar pretty well. And, you know, I wouldn't exaggerate the safe haven aspect. It is a safe haven, but I think now the uncertainty about asset markets, the volatility, the weakness in the dollar, except for the last day or two, I think that's helping support dollar. We actually have a forecast of gold going up to 4,000 by Q3 2026. So, you know, we're kind of optimistic that the rally will continue.
So you expect the rally for the yellow metal to continue going forward. Steve, thanks so much for taking your time out and joining us here on ET Now and helping us understand how the global macro setup is looking like today morning. Thanks so much for joining us.
My pleasure. Thank you.